All right, Raj, we're so thrilled to have you on today. With MasterCard announcing earlier this year the inclusion of cryptocurrencies on the payment network, we want to learn about some of the consumer behavior your teams observed and the other factors that drove that decision. We'll dive into some of the latest predictions, risks, emerging technologies, and opportunities for credit unions as we have been throughout this event. So, Raj, thanks so much for being here.
Thanks for having me. Glad to be here.
All right, so let's jump right in. What is MasterCard's position on digital currencies?
Yeah, absolutely. So it's end of the day, it really comes down to choice, Randy. We are about providing credible, safe choices to all the parties in the ecosystem, be it governments, consumers, or merchants. So our position is really about. We'll talk about this a little bit later, but our position is about taking a set of principles that guided our network over the years in terms of safety and security and so forth, and really applying it and providing safe choices. A couple of examples: we enabled crypto card programs, which allows consumers to be able to access crypto balances in a safe, secure way and provide access to our acceptance network. We're also applying the same choice principle working with governments as well. We've engaged with governments around the world on the development of central bank digital currencies, for example. Again, this comes down to partnering with a range of ecosystem players and bringing the best of solutions to offer it in a safe and secure manner in our network.
Yeah, so you've written about this topic extensively, and some of your recent articles and blog posts, you've mentioned how it's important to understand the difference between crypto that can be treated as currency and crypto that should be looked at as an investment. I mean, it feels like everything just gets lumped in all together. So can you talk a little bit about that, and maybe how can credit union leaders and members spot the difference?
Yeah, that's a great question, and you're right. There is 2,500 or so currencies of various kind that is in the market, and there is about 1.5 trillion, depending on the day, in terms of the value locked up in various forms of digital currencies. So
Wow.
they do get lumped together, and we really think about it in three different categories. The first one is really one issued by the government, is which we call as the central bank digital currency, which is really the equivalent of physical cash in your wallet or purse and the digital form of it. It's still issued by the government. It still has that the value set by the government and so forth. So that's one category. I think it's an evolving category. There are not many that are live at the moment, but when it comes out, it'll just get used as money, just like how you use money today in a bank account, as well as use money when you withdraw in an ATM in terms of cash. So this would be another form. The second category is what industry calls as stable coins. These are digital currency technology used, but there is a fiat backing. There is a currency backing one for one. There are various designs of this stable coins, but we are talking about the one that is one for one backed by a money in a account of some sort, usually a bank account. And these stable current coins move in the network just like digital currencies do. So that's the second form. And the last one that we think about is the one that you, I think, alluded to, which is Bitcoin and the rest, whose value are really supply and demand based, what we call as floating cryptocurrencies. This is the class that is largely used for investment of assets. It is less of a currency; it's more of an investment vehicle for people to buy, because hoping that the value goes up. So a lot of trading happens in this activity. In fact, most of the media talks about this particular currency. So we categorize it this way because some of them, the first two of them, could become a payment vehicle. The last one is more of an investment class. So that's how we think about it.
Yeah, that makes total sense. So you've also written about the inefficiencies that affect crypto usage today. What are the main sources of friction, and what's being done about them? And then also, how can we expect regulation to change the crypto options available to both credit unions and members?
Yeah, this is a very evolving space, and as you can
Yeah.
imagine, the answer is different in each of the markets, right? In US, It's traditionally US had combination of regulatory agencies looking at this, the banking regulators like OCC and so forth, the state regulators, and also SEC, because some of the currencies that we talked about are more looked at as securities as well. So different agencies are involved. So this is an evolving situation in terms of what regulations apply where. But I think we are seeing a lot of encouraging signs around the world where people are trying to clarify this. I'll give you an example. In Europe, for example, there is a legislation that's proposed called MiCA that is trying to put a structure end to end about how these digital assets or currencies should be treated. And that'll only help. Clarity helps for people to get involved and offer services and solutions. And out of the currencies or the digital assets that we talked about just a minute ago, which ones apply as a payment vehicle? For example, we believe stable coins and central bank digital currencies, because of the stability property, can become payment vehicles. So we're looking for that kind of regulatory clarity that allows people like us and others and financial institutions to operate with the clarity that they need.
Yeah. So I'm going to pivot a little bit. ATM cards morphed into the full-fledged accepted anywhere debit cards through major payment, network co-branding like MasterCard. So will crypto cards eventually take the same route and merge into a single multi-purpose card?
It could, and in some respects, it I think already exists. Some of these crypto players, they're not yet, they're not banks. Some of them are looking for banking licenses, offer this multi-currency cards, if you will, that provide access to different forms of digital currencies from one card, if you will, or one account. And similar to banks today offer savings and checking accounts, you could imagine a future where if consumers want to hold crypto, that will be another purse in the list of accounts that they have access to in the bank. I totally see that could evolve into that situation. And end of the day, this is about providing that safety and simplicity. So number of partners that are out there, including Gemini, Wirex, and Uphold, already take advantage of this kind of mechanism. There is some level of interest from traditional financial institutions as well, because consumers are looking again for that choice. And if a bank can offer an account, why not? And the idea is that our card network continues to provide that safe and secure access to it. This doesn't mean we carry those currencies in our network. It just means that you're providing access through our card program to spend from that account. The currencies are still, at least the initial stages, are clear and settled using regular US dollars in US, for example.
Yeah. So you guys have done a ton of research on multi things, but particularly as it relates to blockchain. What can credit union leaders learn from MasterCard's principles for blockchain partnerships that can help them make better cryptocurrency related decisions?
Yeah, it's a great question, and I'm happy to talk about our principles, but it also based on what services and features that you want to offer to your consumer base. We are about providing a safe and secure experiences for consumers and businesses, and help them move value from point A to point B for a variety of purposes. With that kind of the mission as the background, we were looking for currencies that follow certain principles and that kind of guide us to say whether we are in this initiative or not in this initiative. The first thing that we look for stability. I kind of alluded to this before. The currency stability is very important, right? If you want it to be a payment vehicle, you can't have a currency that you pay for a cup of coffee. By the end of it, you paid for like maybe 20 coffees. You can't have a volatile currency, right? So stability is number one principle. The second one is regulatory compliance, which is, this is a very evolving regulatory situation, and we need to make sure that the players that we work with and the solutions that are put forward is fully compliant with the regulations of the given market. The last one is about consumer protection, which I'm sure the people here can relate to as well. Is end of the day, it is consumers are trusting their data with us, and we need to make sure that the safety, security, and privacy principles are fully followed by not just the solutions that we put on the network and all the partners that we work with as well. So that's guides. There are a lot of initiatives come in. It's a very dynamic place. These principles help us pick which partner to work with, what initiatives to get involved in. I imagine people here will have a variation of this depending on the products and services they want to put into market. That's how we think about it.
Yeah, it's incredibly exciting time. So fascinating insights is a topic that me personally, and I know many in our audience are so interested in. So I really appreciate getting to hear your insights firsthand. So thanks so much for being here today.
Thanks for inviting me. Wonderful to be here.
Right. All right. We look forward to talking to you again soon.